What is going on, YouTube community? In this video, I'm actually going to show you a different perspective on how I look at the chart using what Wyckoff cycle and Wyckoff strategy. Well, Wyckoff is actually a stock trader born in the year 1873 on 2nd November. Alright, his full name is Richard Wyckoff, although he's late. He died in 19th March 1934. So Wyckoff basically looks at the chart in three forms, which we call the accumulation phase, the distribution phase, the accumulation phase, the markup phase, the distribution phase, and the markdown phase. Accumulation phase is basically what gives the momentum of what the markup phase. After the markup phase, now it will now lead to what is called distribution phase. After the distribution phase, it's now going to lead what into the markdown phase. We are going to jump straight to the chart and show you technically how you can trade this Wyckoff cycle and how you can also do what? Picture it out in your chart. Alright, but before we do that, you know what? We want to smash that subscription button, like this video so that this channel will get growing, and we get into the video after the intro. Understanding Wyckoff cycle to be a profitable Forex trader. So basically, like I did say in the introductory part of this video, I'll be showing you all how Wyckoff strategy work and how you can trade it. Alright, so do it to smash that subscription button as we keep going into the video. Now basically, Wyckoff strategy is made up of 4 phases. Alright, like I did say, we have the accumulation phase, the markup phase, the distribution phase, and the markdown phase. For example, what we mean by that is this. Let's say the market was doing what? Going up, come down, alright, go up, come down, alright. Let's take this to the accumulation phase. Alright, so what you are going to do when this thing happens, alright, it depends on where it breaks out is what is going to determine whether it's going to be an accumulation phase or whether it's going to be a distribution phase. If this thing finally breaks out of this box, then you are going to consider the whole of this as accumulation phase, which gave to the momentum of this thing rallying all the way up. Now this one that rallied all the way up here, this whole thing now is called what? The markup phase. Now Wyckoff was actually trying to say that after a markup phase, we now have what? A distribution phase. We are going to have a distribution phase. Right, here Wyckoff happens to say that if this finally breaks this zone and do what? And come down like this, then you are going to consider this as what is a markdown phase. So that's just basically a kind of an insight for you to understand what we are going to talk about, or for you to understand how Wyckoff cycle works before we finally get into the chart. Alright, so basically what I just explained now is it gave you a more clear pictorial form like this. If you are looking at this diagram, like I did say, you are seeing what accumulation phase within this area. After the accumulation phase, what happens? You have the what? Markup phase. Alright, after the markup phase, what do you have? Distribution phase. After the distribution phase, now what do you have? What? Markdown phase. So this is basically how Wyckoff cycle works. Now let's quickly hop in and give you exact definitions of this accumulation phase, markup phase we are talking about. The way Wyckoff actually described it, he talked about accumulation phase, a sideways range in which institutional traders or big players buy carefully and skillfully without letting the price move too much to the upside. The small players and the uninformed traders will be unaware of what's happening in the accumulation phase. The stock asset is one of the public focus. On the price chart, it looks like a sideways ranging range bounded by what? Rough areas of support and resistance, just like we did see in this video. Some has to do with what? A kind of ranging within what is support and resistance area, as you can see here. Alright, as you can picture it here. So that's basically the accumulation phase. Now, after the accumulation phase, we tend to have what? A rally to the upside. A rally to the upside, and this rally to the upside, the momentum is coming from the accumulation phase. Alright, so let's see how Wyckoff actually defined his markup phase. Now, Wyckoff defined the markup phase is a classical uptrend that follows the accumulation phase. Uptrend that follows what? Accumulation phase, which means immediately after the accumulation phase, you are going to have what? You are going to have a rally to the upside, and that is where we are interested in taking our trade. We are interested not taking it to the accumulation phase, but once we are able to picture this accumulation phase, we are now going to do what? To find an entry in the what? In the markup phase. And the markup phase is usually the best time to what? To place a trade. Now, after the markup phase, Wyckoff then tends to say that after the markup phase, we have to what? We get a distribution phase. How does Wyckoff define the distribution phase? He talks about the distribution phase, eventually the uptrend, which has to come with what? The accumulation phase, and the markup phase or markup phase loses momentum and prices enter into what? A distribution phase. It is another sideways range that takes place after an uptrend. So this is what he is trying to talk about. After this uptrend, the market finally do what? Gives you another sort of range movement, which is called what? Distribution phase. Then after the distribution phase, we're going to have what? Another rally to the upside down. So our interest as a trader is to do what? To find a way and picture an entry within here. And that is basically what we are going to talk about in this video. Now, with this kind of insight that I have just given you, let's quickly hop into the chart and I will show you where most of this occurred. Now, the first scenario I'm going to use is GBP USD. So coming to GBP USD, you can actually figure out the clone bust, and that clone bust is the distribution phase. You can clearly see what the distribution phase actually occurred. All right, this is the distribution phase we are talking about. It's occurred on GBP USD, and let me basically show you that this distribution phase has this momentum drawn from what? An accumulation phase. It might not be all that bright, but if I go to 1 hour chart, let me go to 1 hour. It's going to be much clearer. On the 1 hour chart, you are going to see the distribution phase very clearly. So the first rule on how to trade Wyckoff cycle, once you picture out either distribution phase or accumulation phase, then you clone it, just like the way you saw me clone this one, right? So as you can see, I actually cloned it. All right, once you picture it, then you pull out a box and clone it. Why you are cloning it is for you to see its exact movement and how it does what and how it moves. So basically, let me show you where the distribution phase came from. If you zoom out, basically somewhere here, boom, that's it here. Right, this is the accumulation phase that gave rise to that rally of GU to the upside. It might not be all that clear on the 4 hour chart, but if you basically go to the 1 hour chart, then you are going to see it more clearly. But after this accumulation phase, what happened the market literally rallied up, continued rallying up, continued rallying up until it did what? As you can see, it was a pure up trend. So yeah, that basically the one that occurred on GU. Let me show you another one that occurred on USD Canadian dollars. The one that occurred on USD CAD was actually a pure what? Another accumulation phase. The one that occurred on GBP USD was a distribution phase. So this one you're seeing here is not a pure a distribution phase. As you can see, basically I clone this all the time. Once you're able to picture the either accumulation phase or distribution phase, what you have to do is to clone it so that I will be able to monitor the price action and how it moved. So as you can see, I cloned it. Alright, I cloned it, and I will show you how I was able to also find an entry. Alright, remember, so this is the distribution phase. I will also show you how we trade this, and watching critically what led to this accumulation phase was what? A distribution phase that occurred here. All right, this is a distribution phase that occurred here. As you can see, it occurred after the what? Accumulation phase. What happened? The market dropped. So basically, Wyckoff strategy is a powerful strategy that does not occur all the time. As you can see, this occurs once in a while. It might even occur 3 times in a year. That's why you wouldn't want to miss the opportunity anytime it occurs. So basically, let's quickly jump into the video and show you how you can picture out entries and capitalize on this opportunity whenever you see it. That is one of the head most of the swing traders also use to swing. Even position traders, you see them holding their trade for most of them are using what? Wyckoff strategy, because it's very, very powerful. So if you are liking this video, if you like how we are going with this video, you want to smash that subscription button, like this video, and join the Telegram community so that you have access to most of my free markup charts and also most of my free webinar and seminar. So coming to GU here, all right, coming to GU, as you can see, we're able to picture out the distribution phase. I'll quickly go to 1 hour charts. And one thing you also need to understand is that this accumulation phase is did what? It's actually occurred in where? It occurred in my psychological level 1.42500. I trade the psyche level a lot, 1.42500, and that is one of the confluence I'm also using on this trade. First thing, the accumulation phase occurred on my what? On my psychological level. I'm not interested in taking trades anywhere here, but I know that most people who trade normal support and resistance will definitely be looking for an entry. And this distribution phase you are seeing here actually lasted for a whole 1 month. This distribution phase is a 1 month range movement of the market. So it's now left for you to be much patience in the market. So if you are somebody who trades only GU and you are using this strategy, that basically means for a whole year you never deport, you never trade. So how do you picture an entry in this market? First thing, you wait after cloning it. The next thing, you wait for a break of the box. All right, you wait for the box to do what? You wait for the box to break and give you an entry. All right, it breaks, give you an either ascending pattern or a descending pattern. What do I mean by giving you either an ascending pattern or a descending pattern? What I basically mean by that is that if, for say, you actually clone this, all right, you cloned it, the market was ranging, and this becomes your what? Your let's say this becomes your what? Your distribution phase. So you want to wait for a break out of this box. All right, if the market breaks out of this box, now let me extend this. Remember this here. Then you want to do what? You want to wait for the market to start giving you this kind of ascending pattern. Here you'll be able to do what? Picture out an entry here. Then basically picture out an entry here. Then you can now capitalize, and then you are now going to do what? Find an entry again here and do what? And rally it down. So that's basically what I mean by finding an entry. Now let's get back to the charts. Now let's get back to the charts. Coming to the GBP USD, as you can see, that's exactly how I was able to picture an entry after the break out of the box. You can clearly see what the break out of the box. What happened? It gave me this ascending pattern, and on the break of that ascending pattern, boom, we hop in instantly, and that is my entry is here. Right, my entry is here. There are two ways you can place your stop loss. You can place your stop loss either above this box, all right, or at the last high that was created. And if you are placing it above this box, boom, then this is your stop loss. But you can actually go and place it on the last high, which is here. And guess where your entry is going to be? Your stop loss. You go to our 4-hour and place our take profit. So basically our take profit is going to be what? It's going to be down to this zone, and I will show you why. I'm making another video too on how to place your support and resistance. Basically, if you look at the trade, the market moved from here to here to this distribution phase. So basically we are also expecting the market to do what? To rally out down from here down to this zone. All right, and as you can see, the market actually did what? Smashed our take profit, and currently we are now on another buy from here to here actually. So basically this trade, I think I posted it on my Telegram community. Let's go to the Telegram community. Yeah, all right, but this was not here. I sent it out on September 30th. Yeah, that's basically the chart here. All right, so that's basically it here. And as you can see, we are in profit of about, we're already in profit about what? This is about 243 pip in profit. All right, this is our first take profit 527, and our last take profit is basically 800 pips. It's 800 pips. So yeah, that's basically it. If you are not in the Telegram community, do well to join. Now let's get to the next video, which is the next chart, which is USD cap. Let me show you how you can also picture your sniper entry and trade this accumulation phase. So let's go to where the first distribution phase occurred here. Yeah, coming towards it. All right, so basically, all right, so as you can see, the market did what? The market actually broke. Yeah, all right, this was a break, so we are basically looking for an entry within this area. So let me zoom in this per hour chart. We are going to hop into 1 hour to show you how we could have pictured an entry if we were live. As it here, the market did what? The market gave us this kind of triangular pattern. It gave us this kind of what? Triangular pattern. If you understand what I mean, this is a kind of what? Correction. All right, after the impulse, then you have that what? We have that what? Correction. So basically, I would have pictured my entry within here. All right, on the retest here, I would have immediately hopped in here. All right, so hopping in here, seeing those candlestick rejection and go favor and proof, hopping in there on the 1 hour. So our stop loss is just going to be a go last low. There are two ways you can place your stop loss. You could have placed your stop loss basically here now, all right, or you could have placed your stop loss here. If you have that down, then use your lot size and what to regulate your risk. So basically I would have placed my stop loss here. All right, I would have placed my stop loss there, and guess where my take profit will be? My take profit is obviously going to here. You know why? The market has actually touched that zone. the market has actually touched this zone before. All right, so we are presently thinking and anticipating that what market is also going to come back towards this zone and give us a perfect entry to rally it up again. Boom, as you can see, the market did what exactly what we said. So basically that's how you trade what Wyckoff strategy. Now let's go to this next accumulation phase that occurred here. Let me show you how you could also enter the trade. So basically, if you are trading this strategy, you need to learn your counter trend line, that is structure, ascending, descending, triangular pattern, because that's basically what we use to figure out an entry in this kind of trade. So basically, as you can see on this trade, I was on this trade when the market was somewhere here. The market was basically somewhere here when I was in this trade, when I was monitoring this chart. So I basically think that this was just going to be a normal counter trend line where it will break and retest and keep rallying all the way up. But it never happened like that. I later discovered what a distribution phase. I later discovered what an accumulation phase within this area. I discovered this accumulation phase. Now, boom, I started watching. Immediately, I knew that this ascending triangular pattern was not going to grow. I started looking for a greater opportunity for me to do what? For me to hop in. Now, I went to immediately I pictured out this break out of this box, this strong bullish break out of this box. As you can see, this is the strong break out of the box. That's why I tell you that you have to clone it. Ensure you clone it so you'll be able to see clearly how the market moves. So I then went to 4 hour. I went to 4 hour. So 1 hour. When I went to 1 hour, I was able to do what? To picture this sort of what? Triangular pattern. So the dots was able to, just by mainly looking at this, you could have actually seen it clearly. So where was my entry? My entry was on the 4 hour. Yeah, I guess remember. Yeah, I actually entered somewhere here. Boom, I hopped in here after this bullish 4 hour candle that you can see here. After this bullish 4 hour candle formed, then I immediately jumped into this trade. I jumped into this trade here. And my stop was here. Alright, then immediately I take profit too. My take profit definitely was going to be here. Was going to be this zone. Alright, 700 pips. Yeah. Was going to be that zone. You know why? The market has done what? The market has actually moved from here. Then coming down here, it gave me what? That accumulation phase. So accumulation phase is usually a sign of pure reversal. That was why I will be looking at capturing the trade up there. And as you can see, it did what I exactly said. Alright, so that's basically it and how you can trade Wyckoff cycle and Wyckoff strategy. I hope this video did help you. If you like this video and you want more dope video like this, do it to smash that subscription button, join the Telegram community so that we also have access to some of the free signals that I do always drop. Alright, so without wasting much of your time, I'm going to see you in the next video.